Has everybody received their food coupons? Has everybody done the registration? Okay. We'll proceed with the next session. In today's session, we have three speakers introducing you to different aspects of fintech and blockchain. All the speakers have designed their contents for final year BCom students, that is you all. Without further delay, we will start our first session. Firstly, we have Mr. CA Pavan Pal Sharma. He qualified CA in 2011, secured All India rank Air 3 in CA Final, Air 30 in CA Intermediate, and Air 7 in CA Foundation CPT. Currently, he is registered valuer in IOV RBF. He is an Entry India startup and tax structuring qualification specialist. He co-founded BCL India in 2010, a 130 plus member team operating out of 3 locations. His latest forays include Finverse, an award-winning edtech app, and Comply, compliance on the cloud. He is the director in independent capacity up till 2021, Olio Buffers Private Limited. Advisors to Board Credit App Technologies Private Limited, YBankU, Procuralite Technologies Private Limited, acquired by ClearTax, The Upstream Life by Vishal Krishna. He has conducted 100 plus workshops on various topics. He was also a guest lecturer in colleges, professional institutions like ICSI. It gives me an immense pleasure to welcome you, sir, for today's session. I hope you guys will enjoy this session. Over to you, sir.
Thank you very much for the kind introduction. Absolute privilege to be here. I have a lot of data points to cover, so I'll be referring to my notes. I hope you'd excuse me for it. Let's get straight into the topic. That's fintech. Fintech, an exciting blend of two words, finance and technology. Some of you, I think most of you would have heard of this already. It's been a very important and hot topic for the last 2 years. And my task today here is to throw light on the journey of fintech and the transformation of the fintech industry that we see here. Now, before we begin, I have a couple of questions for you. I understand you're all final year BCom students. How many of you have a bank account? Quick show of hands. How many of you have a bank account? Awesome. How many of you visited your bank's branch in the last week? Yeah. So that's fintech at play for you, right? You no longer have to visit your branch to get your work done. So banking, both payments and lending, is now largely through your mobile. The idea of my presentation is to share with you the efforts that have been invested to get to where we are today. So to get to where we are today, the position of strength that India finds itself in, that's the present and the possible future of fintech. So let us start. Before we understand the history, the present, and the future of fintech, it is important that we understand the concept itself. What is fintech? Fintech is technology-enabled delivery of financial services. Now, the goal is to improve customer experience, and the way we transact, we interact with banks, we interact with insurance companies, we interact with wealth management apps, and the idea of these applications is to enhance credit and investment penetration. Thank you. Sure, thanks. Fintech primarily covers digital payments. This includes payments through electronic means. The whole spectrum of IMPS and UPI is covered under this category. Card swiping machines at retail outlets, what you call POS systems, transactions that you initiate through your phones, or QR code-based payments, All of them fall within the category of digital payments. The technology here is used to initiate payments between two parties. It can also be used to make payments to vendors. Popular names, Paytm, PhonePe, Google Pay, most of you would be using these apps. In fact, PhonePe and Google Pay together command 86% of the market share. It's a massive market share, just these two applications. So 86% of market share in the payments space. We will learn more about UPI in the following slides. Next, we look at digital lending. Now, this includes alternative modes of lending and raising capital. The universe here comprises of paperless peer-to-peer lending. BNPL, have you heard of this BNPL term? It's buy now, pay later, invoice discounting, and crowdfunding. The technology that we use here is to onboard customers, to analyze their credit rating, to make sure that loans are processed quickly, also to track whether your repayments are made in time. For example, Lending Card, Zest Money, Navi Loans are some of the names that you would have heard of in this space. So this is digital lending. We then have InsurTech. Here, technology is used to improve the penetration of insurance in India. Again, quick question, any one of you can answer. What percentage of India is covered by insurance? Approximate. 40%, okay. Anybody else? 20%, okay. The answer is 4%. Yeah, so 4% of India is covered by insurance. So there is a lot of work to be done. And the hope is that InsurTech would be able to reach out to the masses and cover as many people as possible under the insurance scheme. We then have wealth tech. How many of you are investing in the stock market here? Oh, good. So you must be using some of these apps. Now, technology here is used to transform traditional investing. So we have wealth management services too. Apps like Zerodha, Upstocks, Grow are some example. So if you look at the whole breadth of fintech, it includes digital payments, digital lending, insurtech, and wealth tech. Now, each of these categories by themselves would, if somebody has to speak, it can be a day-long session. I am going to cover the digital payments and digital lending space alone because there's much, that we can discuss on these two topics itself. So let's look at the history. Let's understand how we got to where we are today. Now, India is one of the world's fastest growing economies. And with that, it is also one of the fastest growing fintech economies, fintech hotspots, so to say, in the world. Over the last 2 years, there has been a massive adoption of fintech in India. So it's extremely convenient for us to make payments. And this growth of fintech and the expansion of fintech that you see today can be attributed to various reasons. Some of the important ones are the growth of mobile technology, improved internet penetration, cheap data, because that's important. You need a mobile, you need internet connection. You need to be able to afford the internet, the bandwidth. So all of them together have contributed to the growth of fintech in India. But what also contributes to the growth of fintech in India is India's large population of youngsters. It's easier for the youth to trust fintech compared to our previous generations. So we have a large population that's young, which is mobile ready, has access to internet, and which makes it easier for them to work on fintech platforms. But apart from all of these, the most important factor in my own study that has contributed to the development of fintech in India is government policy. And that is true, it is government policy. Now, most of us have grown up, to hearing the comment that government policies have hindered growth. A lot of red tapeism, bureaucracy. Fintech has been a very different and wonderful story. The government policy has actually encouraged fintech's growth in India. No conversation in fintech would be complete without reference to the India stack. Maybe, sir, when he would be covering this topic, he may discuss this in greater breadth. Now, India stack is the driving force of fintechs in India. Now, it's one of the most important digital initiatives that has been undertaken globally, not just in India. And it is aimed at putting public digital services to the world. It's an open API platform. It allows apps to interact directly with banks, and this India stack has been an initiative of the government. It has 5 pillars. The first one is Aadhaar-based product. You're all familiar with Aadhaar. E-signatures, UPIs, DigiLockers, and account aggregator. Now, Aadhaar helped seed India's economy first and allowed many new participants to enter the economy. UPI gave those account holders access to cheap and digitally available banking. So you're all familiar with Aadhaar. E-signature, maybe e-signatures, Aadhaar-based signatures. DigiLocker, again, is a concept that you must be familiar with. UPI is a concept you must be familiar with. What might be new to you is the account aggregator. I'll cover that in brief in this presentation. So let's go to the history a bit, right? How did we get to where we are today? We have to go right back to 2007. And that's when the Payments and Settlement Systems Act 2007 was introduced. It was under this act that the National Payments Corporation of India, NPCI, was established. NPCI was set up to provide infrastructure to the entire banking system. And it also, the NPCI was the framework under which you would see options like your IMPS, RuPay, you have UPI and FASTag as well. All of that is part of NPCI. IMPS, the immediate payment service, was launched in 2011, and this was under NPCI. So this basically established the foundation on which we have built and we have grown. The DBT program, I'm not sure how many of you are familiar with DBT. DBT is the direct benefit transfer that was launched in 2013. The second slide that you would have seen on my presentation was Mr. Nandan Nilekani handing over the DBT program's research, that was done by his committee to the president. Now, this was launched in 2013, and the idea of the DBT program was to ensure that benefits, subsidies are transferred directly to the underprivileged population. Now, the successful implementation of DBT would depend on banking penetration, and this led to JAM, J-A-M. Have you heard of this concept, JAM? It's called the JAM Trinity. JAM stands for Janthan, Aadhaar, and Mobile. And this was an initiative of the Government of India to plug leakages in the delivery of subsidies. And Aadhaar itself was possible because of the Unique Identification Authority of India, or UIDAI, which was launched in 2010. Aadhaar-based e-authentication has now led to faster KYC. It's led to e-signatures. For example, you sign up to any of your investment apps. They're all Aadhaar-based. You just get an OTP and your KYC, know your customer, is complete. All of this has been possible because of the foundation that was laid in 2007, 2010, and 2011. Now, most recently, you would have heard of this concept of e-Rupee, R-U-P-I. And that is the DBT program, the Direct Benefit Transfer Program, which has evolved into e-Rupee. It is a person-specific, purpose-specific instrument, and it will allow for contactless and cashless payments. The Digital India campaign in 2015 gave impetus to startups through the Startup India program, and there have been several initiatives of the Reserve Bank of India and the Government of India too. So this was 2013, and this is 2016. 2016 is well known for the Digital India and Startup India campaign. What is 2016 also well known for? Correct. So, in 2016, we witnessed a massive overhaul when PM Modi announced on our TV screens that 500 and 1000 rupee notes would no longer be valuable. A bold move with the hope of rooting out corruption. Now this move has been hailed by some, criticized by some. I'm going to sidestep them both and look at the byproduct, which was digital payments, which ended up being hugely successful. Most of you might remember this full page ad that Paytm had given in most newspapers. Apps like Paytm were at the forefront of digitizing payments. And since that time, India has grown leaps and bounds. COVID accelerated this shift further, and today India is home to the highest number of real-time online transactions in 2020. Now, this is ahead of countries like US and China. April 2020, for the first time, UPI transactions overtook ATM transactions. And right now, if you see transactions that are conducted via UPI are close to 2.5 times the number that was conducted on the ATM. NPCI expects UPI to hit 100 crore transactions per day. It's a massive number. As the industry has evolved, RBI continued to draw up master directions. So if you go to RBI's website, there's a tab that you'd see master directions. And master directions, the RBI has issued on the peer-to-peer lending, prepaid instruments, what we call wallets. Wallets are basically, if you look at any of your apps, you would put some small money in the wallet so that you can buy your products faster. And most recently, account aggregator. Like I mentioned, I would like to cover account aggregator in a little bit of depth, because that seems to be the future. Account aggregator, in very simple terms, is plumbing. It is plumbing between banks and financial companies. Now, what this plumbing will permit is one bank to transfer data to another bank. Now, all of this is, of course, possible if the consumer allows. So if the consumer permits his or her data to be shared, banks would now be authorized to share your data. So if you have an account with SBI, and you authorize SBI to share your banking information with, say, Canara Bank, you do not have to take all that paperwork to Canara Bank again. SBI would be able to transfer that seamlessly all through your mobile. Now, it's important to note that only the data that you wish to transfer will be transferred. Data privacy, again, extremely important. I'm sure sir will be covering that when he'll be speaking. Account aggregator replaces long terms and conditions page. You used to have this long page where you sign, small fine print, you don't even know what's happening on the document. But the account aggregator will replace that lengthy documentation. And everything should be possible through your mobile. Now, that we understand the history right from 2007 to where we are today, let us turn our attention to the present. Now, India is amongst the fastest growing fintech markets in the world. We have close to 2,100 fintechs in India. 67% of that number was established in the last 5 years alone. Now, the fintech transactions value size will grow from 66 billion to $138 billion. It's a mind-blowing number. Very much in line with what the dignitaries were speaking of in the inauguration session. The growth rate would be as high as 20%, and this will continue to grow year on year. As of December 21, India was home to 17 fintech companies that were unicorns. Again, a concept that you must be familiar with. Unicorns are startups with a valuation of close to $1 billion USD. A lot of early stage innovation in India was focused on better consumer experience, and fintech started their journey by focusing deeply on one product and focusing on that one product or service alone. It established these startups as leaders in that market. For example, Paytm, payment services, focused on payments and became a market leader. PhonePe became a market leader. Google Pay became a market leader. Now, what happened with new entries into this space was that competition increased, the market space became smaller and smaller for these players, and there was a lack of opportunity which then forced them to look at other areas. I'll be covering that when we cover the concept of super apps and why these companies in the fintech space have had to expand their horizon. Banking as a service alone is gaining tremendous momentum. Collaboration between banks and fintechs to tap into unserved segments will increase. Banks as well as fintechs will have to upgrade their systems to ensure that there's better delivery of service to consumers. Now, there are different trends that are emerging in the present as we speak. The first one being super apps. Have you heard of this concept of super apps? Tata just launched one recently. We'll see a lot of fintech companies getting into the super app space. BNPL, buy now, pay later, again has huge potential in the coming years. Neobanks, again a concept that you must be familiar with, and neobanks are here to give a tough fight to traditional banks. And MSMEs, of course, that will be a market that will be hotly contested. Let's look at each of these areas in brief, right? Let's look at super apps. As we had seen previously, pure play payment companies, credit companies, and wealth companies struggled to get a larger share of market, right? We also have to understand that India is still in the growth phase, as far as the economy is concerned. Again, one quick trivia. What percentage of Indians do you think earn more than 90,000, 1 lakh a month? Guess. What population of India earns more than a lakh a month? 3%, okay? 2%, okay? 5. Anybody else? 1%. So 1% of India earns more than a lakh a month, which means that we do not have a lot of wealth to play with. I am sure the trend will change, and as that happens, people will start, moving to wealth management platforms or investment or robo-advisors, as we say. So we need that base to be created. Now, what happened with these payment players like PhonePe, Paytm, was that just as a payment platform, survivability was an issue, so they expanded their horizon. And these fintech companies saw that there were much larger opportunities that they could tap into, and this led to the growth of what we call as super apps. Now, super apps bring diversified set of services under one umbrella. Let's take Paytm, for example. If you remember, Paytm primarily was used to make payments, but then Paytm started including an array of services which include bill payments, mutual funds. You can book tickets now. You can apply for loans. Now, all that is possible through Paytm. Now, they've had to move beyond just payments. The value of a super app resides in the convenience that it offers to the user. As Paytm, because it's already engaging with you as a payment service provider, it knows what your spending habits are. Given that it knows what your spending habits are, it can also advise you on what your investment should be, naturally, right? Because they know what you're spending. So for fintechs to compete, it is imperative that they focus on the customer, try and solve a problem, but from there onwards, they could always expand into other areas. Let's look at BNPL. BNPL is a short-term financing solution. It allows customers to pay for their purchases on a later date. That's what BNPL stands for, buy now, pay later. Now, BNPL not only helps consumers offer frictionless credit, you don't need a lengthy set of paperwork that you'll have to sign, but it also improves the possibility of making a sale for a vendor. It improves the possibility of revenue that merchants would now earn, right? BNPL now would allow people who do not have that amount of money to buy the product at once to go for a credit-based system, spread that payment over 12 months, but still purchase the product. That way, the vendor is happy, the merchant is happy. Of course, the banks are happy because they are able to earn revenue, and all of this can happen without much friction. Digital lending players have a huge role to play here. There are two models that are popular. You have smaller ticket sizes. Smaller ticket sizes are up to 15 days of salary advance. One example is Early Salary. It's a startup. We also have companies that offer 12-month loans. Now, this could be with interest. It could also be without interest or zero interest. The merchant, the person who's selling the product, will absorb the interest, so it comes to you interest-free. Credit B is a startup. You might have heard of them. They do this. BNPL has also expanded to food aggregation. Most of you must be ordering food through Swiggy, Zomato, startups again. You would see when you go to the checkout page, you have now started seeing something called Lazy Pay. Lazy Pay is an example of BNPL. Correct. Right? So it's much faster for you. Just click, it aggregates your transactions and you can make the payment at once. Cab aggregation, Ola Postpaid is one example, right? And even offline stores. Now, according to Experian, before COVID-19, about 2.2 crore Indians were seeking credit every month. 2 crore Indians seeking a loan every month. But 70% of them would drop out in between because the paperwork and the KYC regulations were so elaborate. So you're looking at close to 1.4 crore of Indian applying for loan every month but not being able to complete the paperwork. Now, that's where BNPL comes in. BNPL is frictionless, easy, much faster, Aadhaar based. They know your history. They can connect with your bank. And when you combine this with account aggregator, its use will be tremendous. Let's look at neobanks. I've put some names here. You might be familiar with them. Now, neobanks are new age, digital-only banks. Now, think of a bank but without a brick and mortar structure, right? Think of a bank but without a bank, right? Without this branch. It's only digital on your mobile. Now, neobanks are nimble and they're able to operate much faster than traditional banks. They are also able to keep their costs extremely low. They don't have a huge team to pay salaries for. They don't need to pay rentals for their branches, no operating expenses. Now, neobanks offer differentiated customer experience and personal financial management much faster than what a bank would. Now, those who focus on MSMEs have also started offering compliance services. They have started offering bookkeeping services. For example, Open, the last icon that you see on the first, has started offering compliance service. In India, the regulatory framework is such that a neobank will have to necessarily partner with a traditional bank to be able to serve its customers. So, for example, an Open or a Neo or Slice cannot start lending or cannot start giving you credit day one. They will have to tie up with an existing bank. So that's where banking partnerships come into play. ICICI Bank, IDFC First Bank, and before the fiasco, Yes Bank. These were three banks that were extremely popular with their API platforms because they allowed these fintechs to create partnerships. Open and Razorpay are two major players. Unfortunately, the funding in this segment has dropped. Hopefully, in the next 2-3 years, we should see a rise again. Let's look at MSMEs, the fourth and last. MSMEs is a sector that's a significant contributor to the development of our economy. You must know these numbers already. We have about 7 crore MSMEs in India, contributing to close to 30% of our GDP. Unfortunately, the penetration of MSME credit has been extremely poor, and maybe the reason is that they do not have sufficient collaterals. They do not have sufficient guarantees, that they can give as promoters. Now, that's where fintechs can play a major role. They can not only help MSMEs bridge that credit gap, help banks bridge that gap, but also help digitize the informal MSME segment. Again, I have put some names here which some of you might be familiar with, and it's split into POS services, business loans, term loans. These are all startups. These are all new companies. Fintech has helped improve the payment experience as well, created new avenues and new customer base that that these companies can go after. So with this background, now that you understand the past, now that you understand what the present is, it may give you a fair idea to look at the last part of my presentation, which is the future of fintech. Now, what could the future look like? Now, technology startups and fintechs are seeing you see an unprecedented spike in this area. So you'll have many more fintechs, new startups, which will enter this segment. We will also start seeing fintechs becoming banks. BharatPay and Centrum, they are one example. They are now a bank. It's like any of your traditional banks. We may no longer see checks and bank slips. I think that's going to go away. And all these payments would be electronic. Digital payments will, of course, continue to grow. And it's expected by 2025, digital payments in India would collectively account for about 70% of payment volume. Traditional banks may go away altogether. You may not see any bank branch at all. It will all happen through your mobile, and that may help bring down their costs significantly, make these banks extremely profitable. So in case any of you are looking to invest in banks, it may be a good idea because over the next 5 to 10 years, their profitability would improve. Embedded finance or seamless integration of financial services in non-financial apps will also increase. So that is it for me. So thank you for your patient hearing. Be happy to take any questions that you may have. Okay, thank you so much. Have a good day.
Thank you for the valuable information for sharing with us, just like the finance technology and the digital world. On behalf of BB Jagdish Science Center and National College Jayanagar, I would like to thank you for sharing the valuable time and information with us. Thank you, sir.